The Dow just crashed over 1,000 points. The S&P 500 is at its lowest level in months. And right now, millions of Americans are staring at their 401ks and asking one question: what do I do? Stick with me for the next few minutes, because I'm breaking down exactly what is happening, why your money is getting torched, and the 3 moves smart investors are making right now. Let's talk real numbers. As of today, March 3rd, 2026, Wall Street is getting hammered. The Dow Jones is down over 1,000 points. The S&P 500 has hit its lowest level in over 2 months. The Nasdaq is bleeding too, down nearly 2%. Now here's what you need to understand. This isn't just one problem. This is a perfect storm. And Trump's tariffs are right in the middle of it. Here's the timeline. On February 20th, the U.S. Supreme Court struck down Trump's original IEEPA tariffs, the emergency tariffs he had been using to tax imports from basically every country on Earth. But instead of backing down, Trump came back harder. Within days, he slapped a brand new 15% global tariff on imports using Section 122 of the Trade Act of 1974, a 150-day emergency measure. The New York Federal Reserve said it loud and clear this morning, and I quote, "The tariff burden falls overwhelmingly on U.S. businesses and consumers. That means you pay more, businesses pay more, and that terrifies Wall Street." But wait, there's more. Because layered on top of the tariff chaos, we now have a full-blown war in Iran. The U.S. and Israel launched military strikes on Iran's nuclear facilities, and the global oil markets are in shock. Oil prices have spiked to their highest level in years. Gas prices are jumping 30% toward 3-year highs. And you know who hates expensive oil? Every business in America. This is why you're seeing airlines absolutely get destroyed today. American Airlines down 6%, Delta down 3%, United down 3%. Airlines burn millions of gallons of fuel every single day. When oil spikes, their costs explode. And so do yours at the gas pump. So we have tariffs pushing prices up, a war in the Middle East pushing energy prices up, and inflation fears spiking all at once. No wonder the market is panicking. Let me show you the carnage. MongoDB, ticker MDB, just cratered over 20% this week after disappointing guidance and an executive shakeup. C Limited is down double digits. Tech stocks are taking a beating across the board because tariffs on imported components, chips, and electronics hit the entire tech supply chain. The Buffett indicator, the ratio of total stock market value to GDP, is sitting at 220%. Warren Buffett himself, who just retired, left behind a warning in the form of $333 billion in cash. That's not a coincidence. That is the greatest investor in history quietly saying, "I am not comfortable buying right now at these valuations." When Buffett builds a cash fortress, that big smart investors notice. Okay, now the big question everybody is screaming in their head: should I sell? Should I hold? Or is this a buying opportunity? Here's the honest answer, and nobody wants to hear this. It depends on your situation, but let me give you 3 frameworks. Framework number 1, if you are panicking, you probably have too much risk in your portfolio for your own comfort level. Panic selling at the bottom is literally the number 1 wealth-destroying mistake average investors make. History shows that the S&P 500 has recovered from every single crash in its history, every recession, every war, every tariff crisis. If your timeline is 10+ years, this turbulence is just noise. Framework number 2. If you have cash on the sidelines, a slow, steady dollar-cost averaging strategy, buying a little bit at a time as markets dip, is how legendary investors like Buffett actually build wealth during downturns. Not all at once, slowly, systematically. Framework number 3. If you're close to retirement and can't afford to ride this out, protecting capital right now makes sense. That doesn't mean hiding under a mattress. It means understanding your risk tolerance and timeline. So where are smart investors putting money right now? Here are 3 categories getting attention. Number 1, gold. Gold is sitting near all-time highs in 2026. When tariffs create inflation fears and a war creates geopolitical uncertainty, gold becomes the world's stress ball. Central banks globally are buying it. ETFs are buying it. JP Morgan's own research shows continued upward pressure on gold prices through 2026 and into 2027. It's not a growth play. It's an insurance policy. Number 2, defensive dividend stocks. Companies and consumer staples, utilities, and healthcare that sell things people need regardless of trade wars. Think toothpaste, electricity, and prescription drugs. These sectors hold up far better when the economy slows. Number 3, short duration treasury bonds and money market funds. Right now, you can still get solid yields sitting in cash or near cash instruments while waiting for the dust to settle. There is zero shame in sitting on the sideline when the game is chaotic. Here's the bottom line. The stock market is being hit from multiple directions at once. Trump's new 15% tariffs hammering businesses and consumers, an Iran war spiking oil and gas prices, and a market that was already overvalued by historical metrics. This is not the time to make emotional decisions with your money. Follow this channel because I'm going to be updating you daily as this situation develops. This is moving fast. New tariff rulings, court battles, oil prices, Fed decisions, and you need to stay informed. Drop a comment below. Are you holding, selling, or buying the dip? I read every single one. Hit that follow button and share this with someone you know who is stressing about their investments right now. They'll thank you later. This video is for educational and entertainment purposes only. Nothing in this video constitutes financial, investment, or legal advice. I am not a licensed financial advisor. Always do your own research and consult a qualified financial professional before making any investment decisions. Past market performance is not a guarantee of future results.